All right, let's talk Nyxoah, ticker NXOa, and break down their Q2 2025 earnings call. Now, this was not your run-of-the-mill quarterly update, not by a long shot. We are talking about a moment that completely changes the game for this company, a real pivot point in their story. So let's get right into it.
You know, the CEO, Olivier Talman, really hit the nail on the head with this one. So forget the numbers from the last 3 months for just a second. The real story here, the thing that truly matters, is the FDA giving the green light to their Genio system for the US market. That's an event that has totally reshaped the future for Nyxoah.
Okay, so before we jump into all that exciting future stuff, we do have to look back at the quarter that just happened. And honestly, the numbers were kind of all over the place, which really explains why the market didn't just explode with excitement right away. So take a look at this. On one hand, you've got a revenue miss that came in about 300 grand short of what Wall Street was expecting. But then, right next to it, boom, 74% growth year over year. That's huge. And then you look at the bottom line, the earnings per share, pretty much dead on with expectations. So you see what I mean? A miss on the top line, crazy growth, but the bottom line held steady. It's a mixed bag for sure.
So what did the market make of all this? Well, the stock only popped about 2.3% after hours. Now that's not nothing, but it's not the fireworks you might expect after a historic FDA approval, right? It tells you Wall Street is kind of saying, okay, we see the good news, but we're going to need to see you prove it. Cautiously bullish, you could call it.
And this right here, this is the heart of the story. The Q2 numbers, they're already history. The real focus now, the whole investment thesis, has shifted. The big, scary regulatory risk is gone. It's been solved. Now it is all about one thing. Can they execute in the massive US market?
And just look at how fast this all went down. I mean, we're talking about their pivotal study getting published at the very end of July. Just 10 days later, bam, the FDA gives them the thumbs up. And then, boom, only a few days after that, management confirms the US launch is on. This isn't some what-if scenario for next year. This is happening right now. Okay, so they've made it past the FDA. Now the big question is, what are they bringing to the fight? What's their weapon? It's this device, the Genio system. And believe me, management spent pretty much the entire call explaining why this thing is a serious contender against the big incumbent player out there. So, how is Genio actually designed to win? What makes it so special? Well, it really boils down to a few key differences that matter a lot to both doctors and, more importantly, to patients. Okay, this is the big one, bilateral stimulation. In plain English, Genio stimulates both of the nerves that control your tongue, not just one side like the competition. Why does that matter? Well, the company makes a really strong case that this gives you way more reliable airway protection, especially if you're someone who tosses and turns at night. And that's a key point they got into their FDA label, which is a big deal. But it doesn't stop there. They've packed this thing with features that patients actually care about. For one, it's leadless. It also uses a wearable power patch, which means, and this is huge, there's no battery implanted inside you that needs to be surgically replaced down the road. Nobody wants that. Plus, it's MRI compatible. And here's a kicker. Their label lets them treat patients with something called complete concentric collapse, or CCC. That's a whole group of people the competition is basically locked out of. All right, moving on. A great weapon is one thing, right? But you've got to have a smart plan to use it. So let's break down Nyxoah's battle plan for attacking the US market. And it's actually pretty slick. So here's the game plan. It's smart because it's focused. They're not trying to be everywhere all at once. Step 1. They're sending their first 25 sales reps straight to the big leagues, the 350 to 400 medical centers that do about 80% of all these procedures in the US. They're going right where the money is. Step 2. They're building a rock-solid referral network. They're getting in deep with the sleep doctors who deal with patients that have already given up on their CPAP machines and are looking for another option. Now, this is really important. Management came right out and said they're not going to give us any hard revenue numbers for a while. So for the next couple of quarters, you have to look somewhere else. These are the metrics that really matter. Think of them as the leading indicators. We need to watch. How many doctors are getting trained? Are they getting through the hospital approval committees? How many insurance pre-authorizations are going through smoothly? And how many new centers are they signing up? That's going to tell you the real story before the revenue numbers do. So let's put it all together. We've got the mixed financials, the absolute game changer of an FDA approval, the cool tech in the product, and their focused launch plan. What does it all mean for the stock? Where do we think this is going? So what's the final call on Nyxoah? Let's get to it.
Our rating is outperform. Here's why. The whole story has fundamentally changed for the better.
The risk has shifted away from a will they get approved question to a can they sell it question, and we think they can. They've got a product with real advantages, they're entering a huge market that's not even close to saturated, and they have a smart, focused plan to get started. The risk is all in the execution now, for sure, but the upside if they nail it, it's massive.
And that brings us to my favorite part of the explainer, the outrageous but plausible trade. So just for fun, think of this as the kind of high-level idea you might hear tossed around a hedge fund. It's a way to play the specific dynamic we're seeing right now. Okay, so the idea is a long straddle, using options, and you'd be targeting early Q4. The logic is simple. Management is telling us, don't look at revenue, look at these other metrics. That sets up the potential for really lumpy, all-or-nothing news updates. We could get an update that shows adoption is going through the roof and the stock could soar, or we could hear they're hitting roadblocks and it could get crushed. A long straddle is perfect for that. It's a bet on a huge move and you don't even care which direction. The catalyst? That first real update on US implant numbers or if they land a big insurance company. That could be the spark.
And of course, you know the drill. This is not financial advice. We're doing this for informational and educational purposes only. So please, make sure you do your own homework and talk to a financial professional before making any investment decisions. Thanks for tuning in.